Have you noticed the recent plummet in Snowflake's stock value? What could possibly be the reason behind this unexpected nosedive? Snowflake, the data warehousing specialist listed on the New York Stock Exchange, has been feeling the heat, and not in a good way. The company's shares took an alarming nosedive, down nearly 20% in early trading on a recent Thursday. This steep decline came as a shock, considering the company's fourth quarter results for fiscal 2024, which were published after the market closed on the preceding Wednesday. Surprisingly, both sales and earnings didn't just meet, but crushed market expectations. The company posted a whopping $774.6 million in sales, with an adjusted earnings per share of 35 cents. To put that into perspective, the average analyst estimate had called for earnings per share of 18 cents on sales of roughly $460.2 million. However, the stellar sales and earnings were completely overshadowed by other news. The company announced the retirement of Frank Slootman, the man who had been at the helm as CEO since 2019. Slootman led Snowflake through its successful initial public offering and continued business expansion. Succeeding him is Sridhar Ramaswamy, previously the company's senior vice president of AI. This sudden change in leadership, much like a bolt from the blue, has left investors reeling. Changes in the CEO position, particularly unexpected ones, can sometimes be a bad omen, signaling potential internal issues or major strategic shakeups in the pipeline. While we can't say for sure if this is the case with Snowflake, one thing is clear. Wall Street is far from pleased with this unexpected leadership shakeup. It appears that the unexpected CEO transition has given investors a shock, causing a noticeable dip in Snowflake's stock. The management's guidance has also played a significant role in this situation. But what exactly is this about? Let's take a closer look at the forecast for Snowflake's fiscal 2025 first quarter. Management has projected that product revenue will fall between $745 million and $750 million. Now, if Snowflake hits the midpoint of that range, it would translate to a year-over-year growth of 26.5%. Seems like a solid number, right? Well, let's compare this with the company's previous growth. In fiscal Q4, Snowflake grew its product revenue by 33% year over year. Even more impressive, in fiscal 2024, the growth rate was 38%. So, what we're seeing here is a deceleration in growth. Even though we're still talking about a double-digit percentage increase, it's a noticeable slowdown from previous quarters. And that's not what investors like to see. They want to see growth, yes, but they also want to see that growth accelerating, or at least maintaining a steady pace. This projected slowing of growth rate is a significant factor that's impacting investor sentiment. It's a clear signal that while Snowflake is still expanding, it's not expanding as rapidly as it used to. And in the high-stakes world of tech stocks, where rapid growth is often the name of the game, a slowdown can cause investors to think twice. Remember, stock prices are often a reflection of future expectations. If investors see signs that a company's growth is slowing, they may decide that the stock is overvalued and start selling off their shares. And that's exactly what's happening with Snowflake right now. While Snowflake still expects to expand at a solid double-digit percentage, the slowing growth rate has investors wary, contributing to the plummeting stock value. So, it's not just about the unexpected CEO transition. The underwhelming forward guidance is also playing a big part in Snowflake's current stock woes.